Man, Alibaba stock is still crashing today, guys. Big news, man. What is going on? Is the VIE structure too risky? Hello, everyone. Welcome to Just Invest Today, man. And we have some crazy things happening in the market, man. Baba is still crashing, and we gotta get rid of all the noise. Try to get rid of all the FUD. We know we are heavy in Baba and we're going to stand strong, guys. And I want to get back into this because people are keep bringing this up that Alibaba's VIE structure is too risky. It's not safe at all. So let's get into this article right now. This article is in July 28th, but I got to bring it back up because people keep reiterating the same thing over and over and over again. So I just had to bring this back up, man, because it's just too much right now, man. But it's okay. We'll get through it. We'll see this company progress in the next 5-10 years, and we're going to see this company fly. So let's get into this article. China will still allow IPOs in the United States, securities regulator tells brokerage. So just think about it. The top regulator for the CCP, man, he's the one saying that they're going to allow IPOs to still stand as long as they follow Chinese rules. And you know the top regulators are talking to Xi Jinping. So you know they're talking to him. So they wouldn't even get his approval for even saying this if he wasn't, right? So think about that. So China will continue to allow Chinese companies to go public in US as long as they meet listing requirements. Guys, make sure you like this video, subscribe to my channel. I'm going to be providing so much new content every day or every week. And I want you to just enjoy it. Subscribe to my channel, please. Thank you. A series of regulatory actions in the last few weeks have heightened investor concerns that Beijing is trying to block foreign capital flows into Chinese assets. And that's what everyone's worried about. Like they think the Chinese is not going to allow any more foreign investors, and everyone is running away scared. Baba, all the Chinese stocks are crashing because of this. But that is just not the case, guys. The cross-border stock listings can also occur using variable interest entity. And guys, that's just basically saying you can't actually own the company, guys, when you're buying shares. They have to own it through a Cayman's Island company. You can still get the revenue and profit, but you just don't have like a share into the business. So that's what basically the VIE structure is referring to. You have this Cayman Island company, shell company under Alibaba. But guys, see, and that's what I'm talking about. I hear this a lot. They're talking about, oh my god, like what if the stock, like if you actually say you actually own Facebook and Facebook goes to zero, or there's some legality matter that's happening with Facebook, you own shares, you can go to Facebook and say, oh, you're owed this or whatever. If the stock goes to zero, you're entitled to some money. Guys, if the stock goes to zero, what are you fighting for? It's already over. Like, that's what I think about it. Like, that's how I'm thinking about it. Like, if it goes to zero, you already lost. So like, just because you own the company, like if you own Facebook, you actually own the company, or you have some voting rights, you think you're safe now that you own the company? Like, let's be real. If the stock goes to zero, you're still screwed no matter what. Even though you can kind of go to the law and try to figure something out. Like, really? Come on. China Securities Regulator Commission Vice Chairman, guys, think about it. Feng Jinghai, I'm not sure if I said that right, excuse me, made a comment during a virtual meeting with major investment banks. Guys, he had a virtual meetings with the top leading banks in the US, saying it's okay, guys, like relax, we're not trying to harm the markets. The source said it followed days of sharp selling in Chinese stocks of fears increased regulatory crackdown by Beijing. The regulator recognized the structure is vital way for companies to attract foreign capital. Guys, he's saying the structure, the VIE structure, is vital for the Chinese economy to get foreign capital because that's what they need. Look how far the country has come from where they were till now. They want to continue that. They need foreign capital. They need the open market. They need all capitalism. Like, guys, they need that. Like, why would they destroy that right now? So he just must, these guys, so far the Chinese just wants to make sure everything is legal. They put into some new laws about security risks or cybersecurity and making sure data is protected. Guys, they're just catching up to what has been going on in the US, in Europe. All those laws and everything that's already been established there, China is now just bringing that all back. So I think everything that's happening right now is just fear mongering right now. Just all fear mongering. Like, it's crazy what's going on right now. The vice chairman went to all the big banks and said, you do not need to worry, guys. We are continuing the VIE structure. It's vital for the economy. Guys, do you believe that? Do you think he's lying? Like, you think he's just lying and saying that, and then like 2 weeks later he's gonna change his mind and just take delist all those companies from the market and not allow any more IPOs? And then a new article just came out saying the Chinese government is working with regulators to allow more regulators into Chinese companies. That article just came out today too. So like, you see the progress being made, guys, with regulation and making sure that everyone knows what is going on, right? So guys, I think all the fear is just better for us, guys, because think about it like this. If it wasn't for all this uncertainty, we would have never have been able to buy Alibaba at these prices. Think about it. Look at it. We would never. We gotta be thankful that Alibaba is this low. Like, guys, we should be thankful that there's so much regulation worries right now. Because if there was never regulation worries, guys, Alibaba wouldn't have decreased 49%. It would have been at 309, probably at 400 by now if there was no regulatory concerns. So guys, be happy about this. Don't be sad. Like, think about how much opportunity this has brought us. So that's how I'm looking at it, guys. Remember, the stock market has nothing to do with the fundamentals of the company. The price of the movements is just up and down, guys. The fundamentals will follow 5 to 10 years from now. So that's what you gotta focus on. Guys, am I wrong? Is Fang just lying to us and just making stuff up, saying all this just to get the foreign capital and then delist it like a year later? What do you guys think, man? Tell me what you think below, guys. Guys, if you like this video, like it, subscribe to my channel, and I'll get back to you in the next video. Peace!